Hey everybody, welcome back to the channel. It is Thursday, April 9th. Hope everybody had a good day of trading today. Hope you enjoy the sirens in the background. That's a reality every day where I live in the city. Just city things happening as they always do. Yesterday, there was an interesting combination of factors in my own trading. I'm going to get to the news in a second, but just before we do that, it was an interesting time yesterday for me because I had a number of different things happening simultaneously. I traded a handful of contracts on the IWM going long, and I closed out a couple of the contracts pretty early in the day for a profit. And then I held the remainder of my contracts for the rest of the day, and they were actually losing me money at the end of the day, but I didn't close them out. So on one day, I simultaneously had a realized profit on some of my contracts and then an unrealized loss on other contracts, which will happen to you sometimes. So if you trade a lot of contracts, you might find that you are profiting on some of them and then you're losing money on others, and then it's up to you to decide your timing of like, where do I close? Am I going to just close for a loss, or do I hold on thinking that my original idea was correct? And for me, I felt like my original idea was correct yesterday. So what happened today is what I thought was going to happen yesterday. And that started a little bit and then it reversed on me. And instead of thinking, okay, well, this is a reversal and it's going to be a complete destruction of the trend, I thought to myself, we're just taking a little bit of a breath here, and then the trend is going to come back in the way that I initially thought that it was going to go. And this illustrates a couple of things. First, the fact that, as I've said on this channel a bunch of times before, you'll often be correct, but you won't be correct in the exact time frame that you think you'll be correct in. That's number one. And number two, the fact that you can fix your average price if you simply add in at a better time. So the contracts that I got yesterday that had been losing me money, an unrealized loss, this morning we opened up and they were a lot less expensive than what they were yesterday. So what I did was I picked the lowest point of the day, added in quite a bit because they were really inexpensive. So I added quite a few contracts. And then throughout the rest of the day, I closed them out as we were pushing higher, and ultimately ended with looks like a $436 profit, 43% P&L. So a 43% P&L on the day and a $436 profit because I didn't freak out and close yesterday and held and then added in and fixed my average price, brought the average price down, and then waited until it did what I thought it was going to do yesterday. Just took a little bit longer than I thought it would take. But in the end, everything worked out fine. Just took me a little bit of extra time to get there. So that's what will happen to you quite often when you're day trading, is you'll find that things don't always happen exactly when you think they're going to happen, but if you give yourself enough time, they will eventually come around and do what you thought they would do, which is one more reason why I never like to trade 0-day expiration. I always like to give myself at least 1 or 2 or 3 days of time before the expiry, because you'll find that just works out better for you in the long run quite often. So That's my little spiel for today. Let's get into the news. So yesterday, the market threw a party. The Dow ripped over 1,300 points, the best single session in a year, after Trump announced a 2-week ceasefire with Iran and the Strait of Hormuz was promised to reopen. Champagne bottles popped on Wall Street, and then Thursday pulled up. Iran's parliament speaker declared the ceasefire had already been violated. Just one day in, and the ceasefire has been violated. Iran's new supreme leader posted on social media that aggressors, quote, will not go unpunished. Israel, which never agreed to include Lebanon in the truce, intensified its bombing of Beirut overnight. And oil, which cratered 16% on Wednesday, down to $94 a barrel, reversed course and shot back above 99. So did you think this truce was going to last? I certainly didn't. I wanted it to, of course, but focusing on what you wish would happen and then seeing reality for what it is are two different things. Here's what should have happened. Stocks should have rolled over, but they didn't. The S&P 500 closed higher for the 7th consecutive session. The Dow added another 276 points, finishing at 48,186. And here's the headline buried inside the number. The Dow just turned positive for the year. The Nasdaq led the indexes, closing up 0.8%, and the VIX, which measures fear in the options market, dropped more than 7%. What does that tell you? The market isn't pricing in a done deal. It's pricing in the direction of the story. It's saying, we were at war, now we're at a ceasefire table, even if that table only has 3 legs on it and it's pretty wobbly. That's a fundamentally different risk environment than 6 weeks ago, and the market is trading accordingly. Now, not everything was green. Software stocks got hit hard today. Salesforce dropped nearly 4%, IBM fell over 2%, Microsoft shed more than 1%. That's the other side of this rotation. When geopolitical fear fades, money comes out of defensive software plays and moves into the sectors that were crushed by the war. And for today, that sector was everyone except energy, which bounced back hard as oil climbed. On the economic data front, February's core PCE came in at 3% year over year, right in line with expectations, which gave the Fed and the market a collective exhale. Q4 GDP was revised down to 0.5% annualized growth, though a lot of that weakness traces back to last fall's government shutdown rather than a broken economy. Jobless claims ticked up 16,000 to 219,000, not alarming but worth watching. So here's what sets up tomorrow and next week. Peace talks begin on Saturday in Islamabad. Tomorrow morning we get March CPI, the next major inflation test, and Goldman Sachs kicks off bank earnings season on Monday. So there's where we're at right now. The ceasefire is fragile, the rally is fragile, everything is fragile. But fragile things can hold longer than you think, especially when the market wants them to. So people make the markets move, and a lot of the trading that happens is a result of people's psychological perceptions of what's going on in the world and then how they proceed to deal with their own perceptions of what's going on in the world. So it's psychology just as much as it is fundamental numbers. That's it for today. Have a good evening. See you here tomorrow. Bye-bye, everybody.